there are three different levels of finance that we always talk about. So when we're talking about positive cash flow for the level one thinkers, these are the people that are struggling, paycheck to paycheck, and they need to figure things out. It's just going to be, can they just operate in the black, right? Can they at least show or somehow manage to a positive cash flow position for the family? And the level two finance folks, that's more of beginning to redirect and having more efficiency. We talk a lot about the velocity of money, the movement of money. And, in level one is if you don't have money, then you're not going to move that around. So their concern is just make me feel happy inside. Let me just know that there's positive cash flow. Level two thinkers are thinking, or should be thinking, how do we redirect it for efficiency? And so, the level two thinkers are they want their dollars to have babies, right? The little bit of growth. And then
Be
the level,
fruitful and multiply.
that's right. And then the level three thinkers are more strategic, because they have a lot more, the accumulation is better. Maybe they came into it from family, maybe they were a trust fund baby, right? And so they had, let's say, a head start. Somebody had the forethought of putting them in a good financial position, or maybe there's an inheritance of some sort. Maybe they've just been, really good savvy. Their parents taught them, and they're either business owners or they have assets that are growing. Those are the only, so I mean, it could be somebody who has real estate and, there's cash flow coming from that. Maybe they invested into some kind of business. Maybe they're like a ghost business owner. They don't necessarily have to be there. They have their regular job, but there's this other, asset that's producing, cash flow. And so now what they really need to look at is capital deployment, right? That you see how the mindset is different. Capital deployment means, if there is a market crash, will I have enough to take advantage of what the opportunities that are going to be available? If a house was worth 350,000 before, and there's a significant market crash, and it happened in 2008, and people were buying houses for 40 or 50 or 60,000. That's capital deployment, but you have to be in position to do that. And so some of those level threes are, again, more strategic, they're not worried about the everyday, getting to the positive cash flow, or having the growth. They already have the growth. They're just moving into it a little differently than everybody else's.
And this isn't to say, when we talk about levels, we're really just talking about the levels that people are at in terms of thinking about money. It isn't a judgment call. It's not a statement that someone is more or less responsible or worthy or deserving. It's really just a description of what you're able to see and process. It's almost like height, if you think about it. Like, if you're on the ground level, you have to watch out for traffic. You have to watch out for pedestrians. There could be animals. Versus if you're in a middle floor, you can see what's below, but you also have a sense of what's above, and you start to get some ideas. Versus when you're on the roof of a really tall building, you can see for miles and miles, and you have much greater perspective. Okay.